Momentum and expectations are building for a leveraged buyout of Dell, would be in the vicinity of at least $20 billion. News came out yesterday that Microsoft may be wanting to fund a deal. But the bigger question that people have is why a buyer like a Silver Lake Partners, which one of the names has been thrown out there, would want to buy a shrinking business like Dell. Our own Rob Searan thinks might actually be a pretty clever move there that looks pretty cheap.
Yeah, that's the answer. It's cheap. It's not that complicated. If you look at, investors have basically freaked out about Dell because they know that PCs are about half their sales, and the PC market's shrinking. And Dell made its
tablets
name.
Eating into
exactly
it, all sorts
tablets. People are using Apple computers instead of PCs.
Right.
People are just aren't interested in PCs.
So it's a declining business.
It's a declining business, but you can still make a good amount of money out of investing in a declining tech business.
Why is this not a falling knife? Why is this not like newspapers 10 years ago where private equity rushed in because it was declining but seemed to spin off a lot of cash?
The problem is a lot of these newspaper deals were done at very high multiples. They were done in 2006, 2005 when prices were very high. Dell's trading about 4 to 5 times EBITDA. I mean, if you take a look at $3 billion of cash flow, free cash flow last year, and the interest payments on the buyout, assuming it's like 60% debt, would be about $700 million. So that's a lot of extra free cash flow.
Right.
Even if their business continues shrinking, they can pay off all the debt very quickly.
Let's get into this Microsoft aspect because there were some reports out yesterday that they might put in anywhere from $1 to $3 billion to help fund this thing.
Yeah.
What's Microsoft's interest in this whole?
Well, Microsoft has a history of the past couple of years. They find a company that's kind of struggling and they say, here's some money, and by the way, aren't you interested in using our operating system for your smartphones and your tablets?
So it's not just a financial deal for them; it's supposedly a strategic one
we'll
as
see.
well.
I mean, it's probably a financial deal for them, and then it's also it's got the strategic extra bit in it, if you will. It's like it's both strategic and
Is that
financial.
a good way for tech companies to be using cash? I mean,
it's not necessarily a bad way to use your cash. The problem is it doesn't really do that much. Microsoft's had some success with these deals.
Well, they made some money on Facebook.
They made some money on Facebook. Nokia, well, Nook probably not so much. The danger, however, is that they've got all this cash, and then it starts becoming easier and easier as your business starts to struggle to justify doing some deals which you're probably not going to make your money saying, you know, we've got these strategic goals, we have to meet them. Let's just throw a balance sheet at it.
But it's
instead of returning cash to shareholders.
Right. Instead of sort of giving this cash back to shareholders, you're sort of plugging a dike, as it were, in the sense that the Dell, while it's, as you say, may be cheap, it's throwing off cash, it's a declining business that Microsoft relies on.
Exactly. In other words, maybe Microsoft will succeed. However, shareholders would definitely succeed if they got the cash back.
Right.
Let's put it that way.
All right. We'll leave it there. Keep an eye out for the LBO of Dell if it comes. We'll be back with more breaking views tomorrow.